Everyone knows it's Friday, so we're going to be giving our market update trends that are going on right now. We've got Matt.stancato here from Guild Mortgage Lending, who's going to be kind of walking us through where interest rates are at today. It's January 10th, 2025. Matt, so let us know, where are we at?
Well, nobody's happy. I can tell you that much. Right now, we're at kind of what I would describe as a crest in the local mortgage mountain. Right. So, if you look at mortgages as a stochastic endeavor, so it's random, but it heads one direction or the other, which is what stochastic means, right? So, as of for the last couple of years, we've been heading randomly but gradually upward. Starting in this spring and going for the next couple of years, everything is lined up for us to be able to begin to go stochastically downward instead. So again, random ups and downs locally, but in the long term, heading down around towards 5% again. For a 30-year fixed, I know you're never supposed to do this. You're never supposed to give a general rate to everybody, but for a very well qualified borrower, 30-year fixed, putting 20% down, everything's going for them. That person is still probably at 6.875, with 0 points right now, and that might even be a little bit optimistic based upon what's been happening in the market over the last week. So that's a little bit. That's within the realm of where we crested when we had the very highest of our rates a couple of weeks ago.
Okay, all right. And then if you're an investor and you're not doing owner occupied, what do you think the rates are within a range currently today?
What you want to do when you price mortgages, and this is something that everybody should know, how you decide whether you want to pay points to reduce your rate or not pay points to reduce your rate is how much you're going to be getting for that investment. So how much bang for your buck, in other words. Uh,
Sure.
you want to buy down your if you want to pay a point to buy down your rate, you should be benefiting by at least 0.5% for paying down that point. So if you can find yourself a situation where you pay a point, but you're getting 3/4, let's say, of a benefit in rate for paying that first point, then that's really beneficial for you because the amount of money you will save monthly from the lower rate is going to offset within 24 months, usually the break even, the extra amount of money you've put in. So when you look at investment properties are priced very high for 0 point rates right now. But if
Mhm.
you in 2 or 3 points for an investment property, they're actually very reasonable. They're down in the 7.25, 7.5 range. But paying those 3 points, of course, is vital. Now, the thing about paying 3 points is you're not actually allowed to do so. At a certain point, you run into what's called the QM, qualified mortgage rules. So there's ways to get around that. One of them is using seller's assist to
Mhm.
have the seller pay one or two or all three of your points in order to reduce your rate as an investor. Let me correct myself. You can only have 2% seller's assist as an investor, so that would be your maximum in that case.
Gotcha. Okay. And then what are some trends kind of picking off of that you're seeing in agreement of sales that are coming across your desk? We've got things under contract that maybe you weren't seeing 6 months ago or a year ago that you're seeing now.
Seller's assist all over
Yeah.
the place. That's a really big one for us right now. Seller's assist can make a lot happen. Seller's assist can be used to buy down your rate. It can be used to reduce the amount of money that you need to bring to the table. It can be used to offset, something that you have to pay for that you find in inspection. It's a very versatile tool, and homeowners are likely to use it one when they feel they have sufficient equity. They're not getting, they don't feel the valuation of the property is under what they expect. And
Mhm.
number that they can't be as picky in the contracts that they're allowed to accept. So before it was 10 offers in on every property, you're going to go 50,000 above asking. That's not happening so much anymore. Negotiation is becoming important again. And
I would definitely agree with that. I'm seeing price reductions or a lot of people holding steady on their price but not getting a lot of traction, things that are sitting now 60 days that would have been off the market in a week. Um, Definitely getting those inspections as well in conjunction with the seller assist, where a lot of people weren't seeing them before, becoming a more informed buyer versus a frenzy buyer, if I can say that, like loosely. But a lot of people were just, I need to have this, I need to have this now. There's nothing else, cashing in on all of their assets, liquidating everything they can to get in the door. So that is really good news because while we might be competing with higher interest rates right now, at least you're being and making a more informed purchase, hopefully, right?
definitely.
And
Oh,
getting less funds that you have to bring to the table potentially for closing costs. So,
And
which is really important for the consumer who's concerned about, money essentially,
the bottom line, everybody's
their
concerned.
bottom line,
Yeah.
as everyone is. So,
And a lot of things we're seeing right now as well. Another trend, and again, piggybacking on what you said, especially first-time home buyers. There's a lot of grant money available, soft second mortgages, things that can reduce your investment into your property considerably as a first-time home buyer. It used to be that the houses you wanted as a first-time home buyer were $200,000, and you put down 3%, $6 grand. That's an amount of money people can put their hands on. All of a sudden, you start talking about a $500,000 property, which looks like a $200,000 property a couple of years ago, and now you're talking about a considerably more amount. That's $15,000 to put 3% down. So people might not have access to that kind of money. And if
and that
that's
doesn't include closing costs, inspection costs, things like that. So yeah, I can
definitely close the gap for a lot of people.
definitely, definitely. So that seller assist being incredibly crucial right now in closing deals. I don't think I'm seeing anything necessarily that's getting pushed across the table without it. I think a lot of people are finding it essential when they're running their numbers and competing with higher interest rates and frankly, home prices.
I have been finding probably 60% of the pre-approvals that I'm sending out have some form of seller's assist on them.
That's great. That's great. That's good to know.
And there was, if I can just cap on something as well, I feel like I gave too dire my tone was too dire earlier about the rates. Yes, we're at a local peak right now, but things are set up for rates to begin to run down for the next couple of years. Um, the president-elect said that he still wants some rates to come for next year, and the Fed in their meeting this week, although they did take two cuts from next year off the board, two cuts that they predicted remain. So when the market has it in its head that there's going to be four cuts next year, and the Fed comes out and says, wait, there's only two cuts. The immediate response to that is everybody backs away and everyone gets a little bit scared. The,
Mhm,
the mortgage-backed securities value, everything goes up a little bit. So that's why we're at this temporary peak. Once
mhm,
people get to realize that just because we're not having four cuts next year doesn't mean we're not in a position to control inflation sufficiently to allow for two cuts next year,
mhm.
that's when it's begin to come down the other way. So we're still in a position where, although we're at that those 7% numbers that no one likes to see, that by this summer and then particularly by next fall, we're looking to have rates back down in the low fives.
Which is fantastic because if you're somebody who is kind of taking your foot off the pedal and you're trying to pump the brakes and you're like, I'm going to hold off till rates come down, although that is an option and everyone has a right to do that. I would encourage people to consider looking for those opportunities now where you're getting the seller assist, you're getting the inspections, you can afford the mortgage payment, and consider that refinancing in a year or so and having some equity in a home instead of waiting for the perfect opportunity because ultimately, as we all know, there's never really this perfect moment to get into real estate. I think that people would say, if you were in 2008 and you were an investor, they would say that was fantastic. I should have bought my house then, or even just a regular home buyer. Oh, I should have bought in 2008 when, the market crashed. Everyone's waiting for the market to crash maybe and try to get in. The truth is that house prices will continue to gradually go up. Your home will continue to appreciate. You will continue to get appreciation and equity in your home. And if you're looking to purchase a home to stay in it, you're going to hold on to it for a while. If you can make the payment, you can get in with seller assist, some inspections at a price point that you feel comfortable with. I think that now is an opportune time to do that and refinance later. I don't know if you would agree with that or not, but
Well, I certainly would, and to that end, Guild offers a low cost refinance. We hold and service more than 93% of our loans on the secondary market, so we actually collect your principal and interest payments. Because of that, because we get that income from the servicing. When rates go down, we don't want to lose any of our customers, so we offer refinances where we let you roll over your existing escrow account. We cancel all lender fees. The only thing you end up paying is title fees. So for any loan that happens before the end of 2025, that comes with a commitment for a cost-free refinance from Guild. So we're looking to lean into that because we do believe that there's no reason to miss a much more exclusive opportunity. There's only one of those houses. There's only one of that house that you love. There's a lot of places and a lot of different times to get money. Not to make myself sound less important, but when you grab that house, you can figure out the financing. They say date the rate and marry the house, and I think that's important.
Yeah, definitely. Definitely. I would agree with all of those things. Any last closing statements you feel like you'd like to share with everyone?
I think, and I've been doing this job a little over 20 years, and I've seen, the market crash. I've seen 2005, 4 and 5 come up, and the crash in 8 through 10, and then going through this again. I feel like the market is really going to come back this spring. There's going to be a lot of things on the market. People are feeling the financial pressures of doing whatever they've been putting off for the last 2 years. They're starting to feel like they have to do it. And again, I think that there's going to be a lot of opportunity in this coming market, and you should keep your eyes open.
All right. My last closing statement would be there's always an opportunity in every market. You should be connecting yourself with a lender or an agent that can help you identify those opportunities to strategize around how to make the best possible purchase for you instead of waiting for something to fall into your lap or waiting for your neighbor or your best friend or somebody else to tell you it's a good time to buy. Talk with a professional who can help guide you through the financial decisions and the steps you need to take in order to make a good investment, a good purchase for your family.
In general, in Chester County, the only bad time to buy real estate is last month. It's pretty consistent.
It's pretty consistent. I would agree with that. Well, thank you so much. I appreciate your time.